Welcome back, and let's get the rupee on your screens down 2% in the trade today, and this is after 2% of gains on Friday. So we have clearly wiped up all the gains that we saw on the day Friday. Strong dollar demand is something that has been weighing onto the market. The month-end demand and of course the strong dollar in the US markets is another reason for the decline. Let's get in then. Abhishek Goenka, who's founder and CEO, India Forex Advisors, joining us on the segment. Abhishek, hi, welcome. I mean, everything that came into the market on Friday has been turned around in the markets today. How are you reading? How much of a further decline are you expecting in the rupee now?
Well, the rupee is in a free fall that everybody knows, and I think any correction which just happens is just staying for a day or something like that, and then again the market wipes up the entire gains like it happened on Friday. So we personally feel that in the coming couple of months' time, probably you will get one more chance close to a level of around 63 or 62.5, probably where the importers can actually go in and initiate long dollar positions, because the free fall that happened in the last few days has been very high and was extremely powerful. So there could be some retracement happening coming in the market, but then that does not change the view that the dollar is going to remain strong in the coming days.
Abhishek, what's your sense? The market feels that perhaps the rupee will bottom out in September. The next quarter actually could see some remittances and some reaction to the measures government has taken.
See, I personally feel, and what I have consistently talked about, is the yield advantage. Now, the yield advantage, if you look at today, is not very high. Probably you will, if you borrow in the US at 1% and invest in India at around 8.3%, then probably after paying the forward premiums, the yield advantage is close to around 0.5%. Now, till the time the short-term rates go up and the 10-year bond starts inching up, so that there is a proper yield advantage. At the same time, the forward premiums, which is quoting at around 7%, needs to come down a little bit more, so that you can get a carry of around 1.5% in the market. So unless you get that kind of a carry, and the rupee also remains at an attractive level of around 63, 64 levels, once both these conditions are getting met, then probably the institutional investors, the people outside the country, will start taking a risk and start investing in the market, and when both these conditions are getting met. So I guess we should see a case in the near term when our numbers are also improving to the extent of our current account. So we are seeing reduced imports and exports are also increasing a little bit. So probably in a medium term we can see some corrections happening, but the major thing what still remains the same is the dollar taking out money, the US taking out money from various emerging markets, and that's the reason why we are seeing countries like India, Indonesia, South Africa bleeding like crazy, which have also gone up when there was a cheap money flowing in the markets. So there is two factors which is playing. One is internationally, the money getting out from emerging markets and Asian markets. On the other side, you are having an issue of, you want to see some improvement in the current account, and the rupee getting at very attractive level where institutional investors will start showing interest. So you actually need to see both conditions, and the time when the foreign conditions start prevailing higher, the rupee will start getting weaker, and if it gets to an attractive level where you get a the yield getting positive 1 to 2%, you might see some corrections in between. So I think you're going to see volatile moves, where a moves close to around 62 to 67. That is going to be probably a move in the coming 3 months. That's the feeling like.
Sure. Vijay, what's your sense? How is it looking on charts with the 2% of a moves constantly for 2 days and a strings of lower data or other record lows to back it with?
Manisha, I was expecting appreciation in the rupee to the 62.50 to 62.80, which never really occurred. I think on Friday what we saw was 63.09 or 63.10 odd levels. And after that you've seen a spectacular rally in the dollar today. I think what is clearly occurring here is that the USD bulls are emerging very, very strong. And I would watch the 65 quarter to 65.50 range absolutely keenly in the coming few trading sessions. I think there is a possibility that the USD bulls are likely to attempt to take the the dollar higher, but see some kind of profit taking cap the gains. There could be some appreciation in the rupee. I would stick my neck out and say 62.5 and 62.80 is the level where I would expect the rupee to appreciate up to, but no further, because a long dollar short rupee trade is still alive and kicking, and I'm just expecting a technical correction, not a total trend reversal.
All right, but still looking for that 62.5, 62 kind of levels on the lower side, as Abhishek was pointed out. 67, 68 not ruled out as yet. But with that, completely out of time on the show, Vijay and Abhishek, thank you so much for joining us. Thank you for watching.